Hey, good morning, everybody. Welcome to a holiday shortened week and our 250th anniversary. Glad you're here, each of you. My name is Brent Moores. I'm sitting in for Kevin Horner this morning, and we have the pleasure of being joined by Mr. Michael Bruskoff. Glad to have you here, Mike.
Hey, Brent, good morning. How are you doing?
I'm doing good. I'm looking forward to the week. I live in Utah and half the state is on fire right now, but we've had a little cooler weather, which is kind of nice. And I'm looking forward to some festivities this week and looking forward to talking about the markets with you.
Yeah, all right. Looking forward to it as well.
So hey, let's go through some disclosures here, and let me also just mention Scott Thompson's in the house. He's in the house. He's Scott Thompson's in the chat helping us out. Appreciate Scott there. You can follow me on X. You can follow Scott on X as well at Brent Moore CS at Scott Thompson CS. And just make sure you subscribe to the Trader Talks channel here on YouTube because that way you get to see the content that is of interest to you. Now, the information today is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And we will look at individual stocks today. They are not recommendations. The paper money software application is provided for educational purposes only. And Schwab does not recommend the use of technical analysis as a sole means of investment research. And past performance is no guarantee of future results. Let's see, all investing involves risks, including loss of principal. Virtual currency trading involves unique and significant risks. And there we go. Now, what are we going to do today? We're going to do kind of similar to what you're used to in this webcast. We're going to go through major market trends and then we'll focus on individual sectors and individual stocks as well. And we'll do a bunch of technical analysis, but just remember, technical analysis is not the sole means of investment research. And, having said that, let's head on over. Here is the Think or Swim desktop software, which is what we'll be using today. And this is the S&P 500. Down week last week. We're up a little bit today, Mike. What are your thoughts here on the general overall market, S&P 500 here? I have it, by the way, I have a 20-day and a 50-day moving average for everyone's information there.
Right, awesome. Hey, Brent. Hey, thanks for having me on here today.
Yep.
Hey, I think when we look at the market right now, I think what you see right there on the chart is pretty much what's going on. I feel like we're kind of really working off a tremendous overbought condition. Doesn't mean that the market is still overbought right now, but if you look at that all-time high that you're circling right there, all right, we've pulled back, right? We've had a little bit of a pullback. It's been a choppy 2 weeks. You're circling a series of lower highs and maybe matching lows, kind of really close right there. I do think that this was probably a healthy move over the last couple of weeks. Like if you go from that low that you have in the low of March to the highs that you have in early June, that's a really healthy move that we had in the market, right? So I think
Yep.
if you kind of look at where we have a little backing and filling right now as we wind down Q2, and I'll say get ready in the next 2 weeks or so for the Q3 earnings or Q2 earnings, my apology, Q2 earnings. I think the market's kind of setting itself up just for the news to come out right now. I don't know if it's getting ahead of itself or it's behind itself, but I think it's pretty fairly paced on the move that it's been making. Love to hear your
Yeah, and
thoughts.
yeah. So this was about, to your point, this was about a 20% increase or so here in the market, which is, in the midst of a market that, well, let's be honest, we've had some not great news over the last few months, and some good news that seems like things have gotten maybe a little bit better in the Gulf, but even this weekend here has been a reminder of, hey, this is on again, off again. There's military action over the weekend. Now it's Monday morning, and now the action is off again. And, shipping's supposed to be resuming here again in the Strait of Hormuz here. And that affects obviously oil prices, which we'll get to in a little bit, but it affects the overall market and the sentiment market. But I mean, part of it may be, hey, look, we've seen this before. We know there's going to be little flare-ups. That just kind of seems to be par for the course right now. But this is what we've seen. I agree. I mean, the market did get kind of, it would seem like an overextension, if you will, maybe settling down to a new normal. And, I'd say right now, maybe a little bit more of a consolidation here pattern on this. This is the S&P 500. Of course, the S&P 500 is driven largely by some of these mega caps. It's driven largely by tech. And we can see some differences sometimes when we look at the S&P 500 versus, say, the S&P 500 equal weight. Here's the S&P 500 equal weight, and you could see last week looks very different on the equal weight than it did on the S&P 500. That night, those, the lower highs that we had, Mike, aren't lower highs, and the lower lows are, the lows are clearly higher on this chart here on the S&P 500 equal weight.
Yeah, Brent, I think, excellent point, right? We joke around, S&P 500, we can get technical how many stocks are in the S&P 500, but just call it 500 for right now.
Yeah.
And if you take out the Mag 7, that's the picture that you kind of just drew right there, right?
Yeah.
The equal weight, right? And I think what we're seeing is the rotation. Everybody's got to own, quote unquote, I got to own these Mag 7 stocks, Brent. And if you think about the week that they had last week, all right, they didn't have the best week last week. I'm looking on my other chart. I'm looking at Apple out of the side of my eye, and Apple had a tough week last week. And then, so when you start taking those Mag 7s out of the SPX, the SPX doesn't look horrible. We were just talking about it. It's looking like it's working off an overbought condition. The equal weight just shows that we're getting some more strength. And I think, I know you had mentioned, we're going to talk about it, the breadth of the market. Maybe we're getting a little bit more participation in the S&P 500 just than those Mag 7s.
Yeah.
I'm sorry, Brent.
No. Okay. So here we have the INDX. And so this is obviously the INDX, the NASDAQ is, I don't know the exact percentage of tech, but it's over 50% tech right now here. So on the NASDAQ. And so you can see more of the pullback. And this is really what's driving that S&P 500, it seems like, there versus the SPX. And this chart looks pretty similar to the S&P 500. Generally, when you compare the INDX to the S&P 500, it usually, I would say, looks pretty similar to it, except it's just bigger moves typically. When it's going up, it tends to go up more than the S&P 500. When it goes down, it tends to go down more than the S&P 500 there.
I think point well said. I think, if you overlaid the S&P 500 on top of that NDX, they'd be very similar. And I think what we're both saying is the market cap weighted index of the S&P 500 is driven predominantly by these large NASDAQ stocks.
Yep.
So there is some overlapping correlation, which, makes for the interesting part of the market.
Yeah, no doubt. Now let's move on to small caps here. Here's the Russell 2000. Russell 2000 has been, for for most of the last couple of years, it actually had underperformed the large caps. But right now, it seems to be the star of the show, and it's continuing to move up. Again, we're above that 20-day moving average. If I were to, kind of consider maybe a support level on this, I'd probably go to the previous highs here and look at that, which is mostly coincident with the 20-day moving average. So a little bit of a pullback wouldn't be a surprise, perhaps, given the strength that we've had, but probably wouldn't be a surprise if we picked up some support here if we did pull back to that. And, I don't know what else to say. The chart's pretty strong on small caps. Maybe this is a positive sign economically here. Mike, what are your thoughts on small caps and the strength in small caps?
Well, I think, Brent, kind of what you're looking at right here, and I agree with you. Small caps breaking out. I don't want to say they're leading the market, but they're, slightly leading, right? They're a strong pocket in the market right now. I think what we're really seeing as the Russell continues to, I'll call it, 52-week highs. It's really maybe the view on interest rates, right?
Yeah.
These guys tend to only perform well in an interest rate declining environment. So over the last few weeks, we've had, a little bit of mixed signals on interest rates. The president had a new appointee, Kevin Warsh. Kevin joins in, quote unquote. We think he maybe might be leaning towards lower interest rates. He's had a couple of fun things with some economic reports over the last couple of weeks. But the truth is, it does kind of look like maybe we have passed the higher part of the rate part of the market right now. Maybe
Yeah.
we
Well,
might be past it. I'm not sure yet, but I think that's why you're seeing the Russell going in inverse correlation to the 10-year that you have up here right now.
yeah, and that's the traditional correlation on those, the inverse correlation between those. Just a reminder to everybody, small caps, number one, the Russell 2000 has a very heavy exposure to things like regional banks, which are interest rate sensitive. They are, and they're just smaller companies that are more maybe vulnerable, I guess, and more debt heavy. And so if financing rates and debt interest rates go up, it is harder on small caps. Well, we've seen interest rates go down. We were up near 4.7%. For those of you who aren't familiar with this chart, TNX colon CGI, you just move the decimal point over one spot to get the rate, to get the 10-year yield here. We're below 4.4%, but that doesn't tell the entirety of the story because, hey, the question is, where are they going? And, we've seen a lessening here. And as you mentioned, the Kevin Warsh, news has been interesting because he was seen as maybe more sympathetic to the president's thoughts that interest rates should be lowered, but that's not how the market is considering it right now. Here is the CME FedWatch tool, which is a third-party tool. So this is not a Schwab tool here, but this is basically giving us interest rate expectations. And what I'm going to do is I'm going to go to the end of the year. I'm going to go to December here. And just a reminder on this, to look up here on this, current rate, 350 basis points to 375 basis points. This is where we're at right now on this. Now, this would be one rate hike. This would be two rate hikes. This would be three rate hikes through the end of the year. So this is using Fed funds rates, Fed fund futures of how investors are kind of positioning themselves for the posture of the Fed. And so it looks like overwhelmingly investors consider rate hikes likely through by the end of the year, and even perhaps a couple possible rate hikes there through the end of the year. So, we'll see. This is no guarantee of what's going to happen in the future, but just a reminder. It will be interesting, by the way. Kevin Warsh is speaking later this week. I'm trying to see on Wednesday he will be speaking. So interesting with the new Fed chair to hear any discussion that comes from his mouth. In general, though, he said, if anything, the Fed has been over communicating, and really we're going to try and cut it down to more just kind of what we know and less speculative stuff there. Mike, any thoughts on interest rates? Further thoughts on interest rates? You've already given us some.
No, I think you kind of put in a nice little bow on that there, Brent. I think Mr. Warsh is in a tougher spot, right? He was hired thinking that he was, quote unquote going to lean towards those lower interest rates. And I think what we've been seeing, CPI, PCE came in, CPI about 2 weeks ago, PCE last week, coming in just a little hotter than expected, right? So that's why you're seeing that potential for the rate cut, for the rate increase. I apologize for the rate increase, potentially one by the end of the year, maybe one early next year. But I think from his point of view, Mr. Kevin Morse, I think it is an opportunity to say, hey, maybe it's not a 5 alarm fire on interest rates where we would have to raise them to control inflation. So I think that gives him some breathing room. It'll be interesting to hear what he says this week.
Yes, it will. Just a comment in the chat from Trade and Grow. Warsh was very hawkish after the FOMC conference. That seems to be his view. He does seem to be, his language and what's coming out of the Fed does seem to be more hawkish than it was. Hawkish, for those of you who aren't aware, are those who tend to be more concerned about inflationary pressure and really want to get on top of that, which would correspond more towards higher interest rates. And just a reminder, one more thing, short-term rates, the Fed funds rate isn't necessarily, it's not a one-to-one correlation with what goes along with the longer end of the curve here. Now, how's the market feeling? This is the VIX. And so right now we're about 18 on the VIX. It went up a little bit last week after, the market was struggling. In general, this will go inverse what the market does. But so a little elevated over where it has been, but we'll have to see on that in terms of the VIX. And something I always like to point out here when we talk about the VIX is, as we consider the VIX, keep in mind this is on the S&P 500 index options on the S&P 500. If you go to the VIX EQ, this is the constituent VIX index. In other words, what's the average implied volatility for the individual stocks? If we look at the individual stocks on the S&P 500, what's your implied volatility on those? And you can see obviously much, much higher. Well, what happens is some stocks are going up and some stocks are going down on a particular day, and it really kind of moderates what the index itself does. And but when you look at it on an individual basis, still a fair amount of volatility in individual stocks. Are there any thoughts on implied volatilities in general there, Mike?
No, I think, it's interesting what you just showed there, because you're saying, hey, the individual stocks, air parenthesis, slightly more volatile than the index itself, which I completely get that. But when you show it on a graphical formation, I've never seen it on a form like that. I think it kind of shows a slightly different story of the VIX building up a little bit of pressure right now, right? I'm looking at my VIX. I know you don't have the 200-day on there. And, we're right above the 200-day moving average, or actually, my apologies, right below it right now. So over the last 200 days, it's been kind of around this area, but it's a little elevated compared to it was probably about this time last year. This time last year, the VIX was a little bit lower. We were in the lower teens, and now we've moved towards the higher teens. Okay.
Well, hey, let's move on from talking about major market indices and talk about some commodities.
What's funny, I almost called you Kevin Brent. I apologize. What's funny about the whole thing is, if you go back a year on your chart, gold was the hottest thing as we moved into this year. And then when you turn around, it was the best thing in the world. This last July, from last July until February, it was awesome. Everybody had to have it. I got to buy more gold. And now you look at it, and the percentage move that you've moved down below there, I know you don't have that 200. We've already broken the 200-day moving average on this so quickly, right? So the decline on that, and I think it really goes back to what we were just talking about interest rates. Usually if there's a lot of inflation, we got to kind of raise interest rates to control inflation. And I think as we went through last summer, we were feeling that inflation wasn't under control. And that's why gold was running so well. Now, just think about our conversation 3 whole seconds ago.
Yeah.
Maybe we think that inflation is under control. Maybe we think that he doesn't have to raise interest rates. It seems like gold is maybe a little more oversold than what we just were looking at about the potential of an interest rate hike later on this year.
Yeah,
Slight.
and so I brought up a 3-year chart just to show the meteoric kind of rise in gold here. For a lot of my career, Mike, gold has been the boring investment, to be honest, and it really was. It hasn't been the last few years because when it became not just a thing that people use to diversify a portfolio, but it's a thing that people use to speculate on just big moves in the market, which is kind of a weird thing. I mean, 3 years ago, down a little bit above 1800, up, to 5600 at its peak. These are weekly candles, by the way, but now it's pulled back down. But part of it is probably, just did it get a little bit overbought, get a little bit head above skis, and so we're seeing that pullback. Not only are we seeing the pullback in gold as we look at other commodities, and by the way, as we look at these are futures, but we're not talking about trading futures here, folks. We're just talking about the price of the commodities, because the price of the commodities can tell us something about where money is going in the market and, possible economic considerations. But here's silver, kind of a similar type thing, not an exact same situation, but it went up. It kind of went through this cycle down. Now, in fact, let me go. I'm going to switch back to like a 6-month chart. Here's silver, which is pulled back. When we talk about copper, it's a little bit of a different story, though. Here's copper, which hasn't had the pullback in the others. Copper, not so much a precious metal, but more of an industrial metal. And copper staying, if copper crashes, usually that's a very bad sign economically, because that indicates typically a lot of people feel economic demand is going to go down, not just in the US, but worldwide. And that doesn't seem to be the case here in terms of copper prices. We've had a little bit of a pullback, but nowhere near what we've seen on those precious metals there on that. Any more thoughts on any precious metals here, Mike?
Yeah, I think you're good. I think you're good on those.
Well, let's take a look at, of course, something that has been driving the market, and that is, and drives your car, crude oil here. It's lowered. We're down to about $71 or so, $70 a barrel on crude oil. And, of course, one of the interesting things on crude oil is, of course, we had the war, it went up, it actually started going down. It leveled off, and we started going down a little bit before the conclusion. And it's still lowered. We're not quite to pre-war levels, but we're a lot closer to that than we were the peak. That not only could be a good sign on the inflation front, but both because of people fueling their automobiles, for example. But think every industry is affected by the price of oil, and shipping costs, travel, leisure, all affected by the price of oil. And ultimately, what we want to see is that oil trickle down to actual prices on the pump. Here's gasoline futures as opposed to just oil futures. We've had a little bit of a pullback on gasoline futures, but not as much as what we've seen on oil right now there, Mike.
Yeah, one of the diametrics that we've been seeing in the market, right, is oil prices are coming down. Yes, the price at the pump is coming down, but maybe not at the same speed as what we're seeing on the raw commodity of oil itself. So I think, I heard over the weekend, I heard the president concerned about that as well, potentially thinking of halting the national tax on whatever they call the summer blend, where
Yeah.
it's 25 cents more versus, the winter blend. So I do think what you're showing right there, future, prices at the pump kind of flattening out, even though the price of oil is coming down. So, as a consumer, and I think we're all consumers that are listening to this, we'd like to see the price of the at the pump come down as much as we're seeing the price of the raw commodity itself.
Yeah, I haven't seen that yet, but to a certain extent, prices are lower if you are driving a gas fueled vehicle and you notice that. Here's heating oil. Often we'll use this as a proxy for things like jet fuel or and you can see this has been coming down too, which certainly can help in a lot of other areas. Now, hey, let's talk about some individual stocks here for a sec, because we have some companies coming out with earnings this week. We're not in earnings season yet. In fact, let's just take a quick look here. Let me go to the calendar. Here's the S&P 500. Just to make it a little easier to see, I'm going to make this the S&P 100. We'll miss out some companies that you're familiar with, but it also cuts out a lot of the clutter, and we can kind of see. It's June 29th. Last week we had FedEx. We got Nike is probably the biggest one coming out this week, I would say. That's on the 30th, so that's tomorrow, and aftermarket closed. But when does earnings season start? Earnings season starts with the banks. So July 14th, Bank of America, Citigroup, Goldman, and so on here. So that's when earnings season, and then we'll be able to see, hey, are we going to do well in terms of not just individual companies, but when we talk about, for example, market valuations and we talk about PE ratios, the E part of that PE ratio is a big thing. And that's driven, well, we can get a glimpse of that with corporate earnings. One thing that probably helped the market significantly over the past quarter is the corporate earnings season was pretty strong. Earnings growth was pretty strong with corporate earnings. And we'll see if we can follow that up. Some of that was probably driven by AI. AI spend and whatnot, and some benefits from that. But we'll see what happens with that. That's still a couple weeks away. But I'd say in terms of this week, we're looking at Nike as probably the biggest company out there with earnings this coming week here. And on the economic calendar front, while we're talking about news to pay attention to this week, it is a holiday shortened week, by the way. So Friday, normal economic reports will not be coming out. I mentioned Kevin Warsh is speaking on Wednesday. We have ISM manufacturing PMI on Wednesday as well. That's kind of a bigger one. We've got employment report, including unemployment rate, non-farm payroll report coming out on Thursday this week as well. All of those can certainly affect the market. Any thoughts on earnings or economic calendar there, Mike, here for this week?
I think, one of the reports I know you might have missed right there, consumer confidence coming out tomorrow, right?
Oh, yeah.
So we got consumer confidence. How are me and you feeling, right? How are we feeling about the market? How are we feeling about spending money in the market right now? Not even in the market, but in the economy, right? So I think consumer confidence is a big one this week. I do agree with you. Holiday shortened week. So we've got the employment report coming out on Thursday versus Friday of this week. I think just to keep an eye on that unemployment rate, right? The 4.3%, we've been pretty steady there. Let's not see an increase in that. Hopefully a little bit of an increase in the non-farm payrolls. Those would be things that we would want to see to make sure the economy is still moving forward, I'll say, on a good foot. But no, you hit the right ones right there, Brent. Looking forward to seeing how we can get some of those good reports and kind of start putting the data in the market.
Yeah, yeah. So yeah, thanks for calling out that Conference Board consumer confidence report coming out tomorrow as well. Some stocks in the news. Hey, we've got Apple. Not moving much today, but I should be mention that Paul Mead, Vice President of Apple in charge of Vision Pro headsets and the company's smart glass efforts, is leaving next week for OpenAI. That's been in the news. That's reported from Bloomberg. And um, so not, Apple's kind of hanging in there. I know you mentioned Apple earlier today, but they're not really moving much in the way today. Another company that's in the news a little bit, another couple companies, I guess, is Alphabet, up 3% today. Nice little bounce. Of course, trend has been going down on that. We're below the 20-day. We bounced off the 20-day. We'll see if that acts as resistance if we continue to move up. But um, Google has placed a limit on Meta's use of its Gemini AI models after Meta tried to gain access to more computing capacity than Google could provide. That is reported by the Financial Times there. So, just that's in the news, but nice little bounce here on Alphabet as we look at that. In fact, while we're doing that and looking at individual companies, let's go to the Visualize tab and just see where we're seeing some strength in the markets right now. A little bit mixed. Communications, which is a good portion, is Google and Meta, is because that's, in fact, let me just kind of draw that out. This is the S&P 500. That's a pretty big chunk. It's not as big as IT, but this is all by market cap. A lot of green there in communications, but that is a lot of that is from there. Not a, sometimes you see one group just all green, maybe some more strength in the industrials. Some of the bigger consumer discretionary, Amazon, Tesla, some of these big caps are doing pretty well. Not all of them, though. Nvidia, IT is a little bit more mixed today, I would say, on that. So that's kind of the mix we're seeing in the market there. We can see on communications here on this, but yeah, that's what we're seeing on communications there on that. But that's just a glimpse of the overall market there. Let me just bring up a few while we still have a few minutes and we're running up on before we run out of time. Let me just mention some upgrades in the market and some downgrades in the market. So Roblox up 11, almost 12% right now. This is after really not a good, well, I've got a 6-month graph here on this. We broke above that 50-day moving average on this. These were upgraded by a REIT to buy from a neutral. And yeah, that BJ brings up a good point here. In fact, we'll come back to this in just one sec. This is to your point here, Mike. BJ just mentioned I can bring up this index here for communications instead of the ETF here on this. And you can see
Don't worry, my
there's a
apologies,
6-month
Brent.
chart on that.
Oh, good.
So, and you can see that's a nice strong bounce there. Mike, tell me again what you were saying on
Just kind of pull up like a 12-month chart on those guys.
Okay, sure. Let me pull this up here.
On this one.
Yep. I should have thought of this myself. Thank you,
Yeah,
BJ.
if you kind of just look at that move that we were looking at in Alphabet a few seconds ago, I mean, pulling it right off of the floor, right? We were at the lows on the IXC that you have right here. So it is a nice move off the lows. I don't know if you have any indicators. I have a stochastics on mine. Maybe a slight turn up in those things. So maybe a little bit of buying off of an oversold scenario.
Yeah, here's the RSI.
Yeah, like right where your highlighted blue is right there. I don't know that it's necessarily a buying opportunity, but I do like to see support across those lows right there. That was my point.
Yep. No, great. And so, yeah, it's always great to have participation in the chat too, to help me out when I wasn't thinking on that there. So we had the upgrade on Roblox. nice big move on that. Let me just kind of zoom this so we can see that a little bit better there. Also, Casey's General Stores, another upgrade in the market here today. And this is not up as much, but up 3%, not bad. After, I don't know how many days in a row we went down on this, probably a nice bit of relief. And this is BMO Capital. They upgraded Casey's General Store to outperform from market perform with an unchanged price target of $950. So that's up there on their price target on that. And Warner Brothers Discovery was upgraded today. Let me just pull that up. Up a little bit, not much. This has just been kind of slowly drifting down, but Seaport Research upgraded Warner Brothers Discovery there on that. There's downgrades on the market too. Here is CrowdStrike. Kind of funny, downgrade. The stock is up 6.5% today. So I don't know if I can explain that, but by the way, if you see this on the chart, some of you guys may not be familiar with that little symbol down there. That's a split. That's a stock split here. Mike, the funny thing is in the early days when I was in the market, companies used to be very averse to having their company be priced in the hundreds of dollars area. And they'd seem to always split whenever it got up to be multiple hundreds of dollars. No longer, companies typically seem to be more comfortable with that higher level. But here we have a 4-for-1 split coming out on this. This is a REIT analyst downgraded CrowdStrike to neutral from a buy with a $730 price target. Market doesn't seem to be taking that with, too much concern with the downgrade there. Is there some other news here on CrowdStrike today? Let's look on the live news and see if we can find anything here. Interesting. So I saw that. This is a few days old though. They did have some upgrades from Deutsche Bank. So I don't see any particular news on this, but a nice move up on CrowdStrike. It is funny how sometimes a stock will move up on a downgrade or down on an upgrade there. Let's look at a couple more here. Here's Salesforce, and this was downgraded by Phillips Securities to neutral from a buy with a price target. This is a significant change. Price target of $166 down from $270. That's a huge downgrade after a big move down. Kind of maybe late on the downgrade, perhaps. I don't know. But again, the company doesn't seem to be taking it too negatively. It's up almost 1% today. Any thoughts on the chart here, Mike?
No, but it is interesting to see, when you see a Dow stock get downgraded, right? So, I'm looking 52-week lows right now. The Dow is holding up, pretty well over the last few months, given one of its, 30 components has pretty much been trending down for the entire time.
Yeah, exactly. Here's one more, and then we'll kind of do quickly through sectors and just see sector performance. Here's Adobe. Obviously, these are I inverse my symbol, ADBE. There we go. Adobe's up almost 3% today. Again, that's about kind of looking almost like Salesforce did, but Adobe has had a rough year. They were downgraded. Phillips Securities again downgraded Adobe to neutral from a buy with a price target of $203, pretty close to where it's at, from $385. Okay, so they seem to be recognizing what a lot of other investors recognized about it, I guess, before. That's not a prediction for the future, but it is just a statement of how well they've performed, which has not been well. This just kind of goes to where, certain parts of the market, such as, the software as a service type companies have lagged. Semiconductors have done pretty well overall, over the past year or so. and just a change in money flow as to where the money is going in the market. But Adobe is trying to pick out a support, maybe a little bit early though, to call that a low. What were your thoughts on that one there, Mike?
I definitely think you're early on calling it a low, but I agree with your sentiment. They either love certain stocks or they hate them. If they were, as you were just saying a few seconds ago, I'm looking at Adobe. I'll be honest, I don't watch Adobe every day. And I'm looking at this chart. I was looking at the Salesforce chart, yet it feels like anything technology related is so strong. So it is super subsector, very fine point as you just pointed out of which stocks they really like. But yeah, Adobe right now, I think it's a little early to call that a bot.
Yeah. Yep. Hey, let me just wrap up with this. These are the sectors, S&P 500 sectors of the market. So there's 11 of them. This column right here is a 1 month change in how things are doing. And this column right here is just today's change. So if we're looking at what's going on today, communications, we looked at that. We saw Alphabet is going up. We saw Meta is going up. That's really driving that. We got discretionary going up. Nice. Those are the two winners for the day. So far, I don't know how the day is going to end, but those are the two big winners for the day right now. Materials, not so much. They're maybe they get the booby prize for the day here so far, down 1.5% there. But it is and that's maybe a little bit indication of what we've done over the last month. Communications and consumer discretionary have lagged over the last month. Let me just sort here by that. Healthcare, industrials, financials have been the big winners. Utilities, winners over the past month there. Communications, IT, and discretionary. So kind of more of a cyclical type rotation over the past month. And of course, that's just one snapshot in, time, the 1 month period. And if you look at 3 months, it'll look different, or 2 weeks, it'll probably look different. But that's what we've seen there. Any thoughts on sectors here, Mike, before we wrap it up?
No, I do. I mean, I'll be honest. I do like the move that the healthcare is making. Looks like it's really trying to break out right now. That was a strong move on Friday. We'll see how it wraps up today. But that's kind of a key pivot point. Looking for a potential breakout.
Yeah, that is interesting because that's some highs that we had there. And do we hold this through the day, through the week? If we do, this is, right now we'll call that a tenuous support level maybe as we broke through that, but we like to see that probably stick above it just a little bit here on this. Now, let me just, first of all, thank you, Mike, for joining me today. Tell us all what you do when you're not on Trader Talks every once in a while. We appreciate you here with that. But what's your regular job here?
My regular job is, I work as our regional trading consultant in our branches and making sure that our clients are well aware of all the things, wonderful things that Schwab offers and the abilities that we can, have to, help our clients out in formulating parts of their strategy. So if you haven't had a chance to meet the regional trading consultants, talk to your financial consultant and they'll get you set up with somebody on my team out there in your local branches.
Wonderful. And you can click on, you can go to the Schwab website and find your local regional consultant there as well. Hey, I want to thank each of you for taking some time out of your day and joining us. I also want to encourage you to subscribe to that Trader Talks channel. If you like the session today, click on that thumbs up at the bottom of the page. It helps the algorithm. You know how this works. And, hey, we're all about free education here at Schwab. And so that's what we're doing. And anything you do to help that further that, we appreciate that. And it helps spread the word and does me a favor as well. So we appreciate you. Thanks, Scott, in the chat. And everybody, hope you have a wonderful week ahead. Happy 250th birthday to, I'm going to date myself here. I remember I was a kid in grade school and it was the bicentennial of of the country. And so that kind of dates me, huh? But happy 250th, everybody. Have a great rest of the day. Bye bye.